So it's Tuesday today, and we had CPI news today, and you could see what CPI news did. A lot of bearish movement to the downside. So I was saying that we will create more highs. Actually didn't. CPI turned on us here, and we're actually finishing this market maker sell model. So the -2 minus supervised standard deviation, which I have marked out, reacted off it perfectly. We had a reaction there. We set buy side there, which was Friday's high, I think. Yeah, Friday's high right there. So we swept buy side there, got a breaker, unicorn right there as well. Never get tapped into that though, but standard deviation from the A to B leg. After sweeping those equal lows, A to B leg, standard deviation here, came in line with like this order block. So we right tap into the order block, and then minus 5 didn't really come in line with anything. Minus 0.5, minus 1 also didn't really come in line with anything. But if I'm looking at this now, this is actually a daily order block. Let's see if there's like another time frame order block. So it's just a daily order block, and this is the mean threshold right here. And I think we probably will actually sweep those equal lows. And then in AM session, we'll be kind of like displacing to the upside. It's like somewhere around here. And then in PM session, maybe we'll take out these equal lows here. But we could also do that in AM. I don't really know. But bias for today is actually pretty bearish. Where do we want to go? Because I still think that we do want to go to all-time highs again. Because DXY is like really bearish on like the monthly. So right here, also on the DXY, we swept this higher. So I was saying that we were gonna turtle soup this high, and we're now at this high. So this could be like turtle soup. But actually, I'm expecting for DXY to actually like dump a lot. If we like inverse this, if we close above here, then maybe I'll think about this this high here, this rejection block constant encroachment, and this high here. But that will also mean that DXY will probably accumulate even more. And then I don't really know what NQ is going to do. But still, I'm now pretty bearish on DXY. So that means pretty bullish on indices. So let's say we're going down pretty deep right now. Where do we want to retrace off of? Where do we want to retrace to? What do we want to balance? What imbalance do we want to imbalance? What imbalance do we want to balance? So we have this pretty big vacuum block here. So this right here. That's already on the daily. What I'm really marking out here though is probably on the daily actually. Right here. So here to here, and we will just mark this out as the biggest overlay here, or the biggest gap here. So we could just mark this out as a volume imbalance. Right there, we will probably want to really fill up this entire thing. So that would mean if you take like a singular overlay gap of this entire leg here, then there will be actually on the daily, there's no overlay gap there, but still this market maker sell model, that would mean that we want to sweep this low here. We have equal lows here, but we also have this low here, because that would be low resistance liquidity one. It would just be a rejection block there, and that this actually would be our drawn liquidity right there. That would be our drawn liquidity, because this rejection block mean threshold, we're actually displacing pretty big through there. So I'm expecting like a retrace to the upside, but not really that big of a retracement. I'll see like a retracement until like this order block here, which is gonna be probably a 4-hour order block, or a 6-hour order block, yeah. So we could just mark that out. So this will be the order block here. So I don't really see us going higher than this here. Don't really see us returning back to here. But this is like the max we could look inside of like this range. This range here. Oh, wait, yeah, right here, this range. So somewhere a retracement from there. But still, my drawn liquidity is going to be these equal lows. That's what I'm targeting. And we're kind of just like accumulating low resistance liquidity to the upside, and that's where I want to see Judas swing go or the AM session go. So that's basically it. Market has like 7 more minutes to open, so we'll wait and I'll bring you guys back when market opens. Alright, yo. Market's about to open. It just opened. Alright, we'll probably take out that low. Alright, so we took out the order block low. So now we definitely know that we were bearish. Don't really want to take us. Don't really want to see us take out this low or these equal lows here. I want to see actually Judas swing to the upside, and then fill up this entire CPI gap. Actually, if we make it like a singular for gap out of this entire range, then drawn liquidity would be here for me, right there. And then we want to fill up the SIBI here. And that's kind of where I want to see the Judas swing go. So we're SIBI here. Let's mark out market open here, right there. Yeah, I want to fill up. I want to see us fill up some of this imbalance. Take out this low resistance liquidity, which is this market maker sell model or market maker buy model as well. If you look at it like this, then we have our original consolidation here, consolidation 1, consolidation 2. You could look at it like that, or you could just look at this like a low resistance liquidity, like a trend line liquidity, like right here. This it is. So people are thinking that once we tap this 3 times, then we rect off it again, and then on the 3rd time we'll just go straight to it. So that's really what I'm anticipating. I want to see bullish displacement to the upside in the AM session, so we'll see what happens. Let's look at Forest Factory. So tomorrow we have no news. So today we're kind of expecting, if we look at like the weekly profile, then of course this is new for me as well. So I'm kind of like learning from this as well. But like previous week, I know that is like an accumulation week, but that doesn't have to mean like a power of 3 week. So we don't have to have like accumulation week, then a manipulation week, and then like a distribution week. We could just make in that week, we could just make a lot of liquidity because it's our accumulation week, but it doesn't have to be accumulation, manipulation, distribution, but it could be accumulation for a market maker sell model, market maker buy model, because we're accumulating there as well. So we have our original accumulation, first stage reaccumulation, and then yeah, we just have one reaccumulation really. Or you could have it as like this, let's say right here. Isn't really the original, or maybe it is actually. So this would be our original accumulation here, because we're kind of like in this range, which is actually really big original accumulation. This would be our original accumulation, but we displaced lower, so that's really why I'm not liking it. So I would say this entire thing is actually our original accumulation, because in this range we were staying inside of this range. So this is actually our original accumulation, I would say. Oh wait, let's actually take this back. So from there to there, that's our original accumulation here. And this is our reaccumulation, and then we have a smart one reversal after this. So this could be our third accumulation here. So you could look at it like that. So we don't have to have like a distribution 3rd week, but yeah, it also could happen. Again, we could have like, this would be, how could you look at this? Let's mark it out like, where is it? I have no idea where it is. When I get like the trend line liquidity, I have no idea where it is. I have no idea where it is. Is it this? No, I have no idea. But this could be the trend line liquidity. So accumulation week. You could let's say this is like the trend line. So this is like the accumulation week. Then we have Oh, it's gonna be messy. All right, so accumulation, manipulation, distribution, right? So accumulation, manipulation, distribution. That would also be power of 3. So you could still look at it like that, and I am still looking at it like that. So I want to see the Jude swing to the upside. We're not really having a lot at market open right now. It could change later. We'll see what happens. Let's see. We have a singular for A gap, or actually we have 2 for A gaps here. So we have a singular for A gap on the 3 minute. It's actually probably a pretty nice setup. Standard deviation -2, -2.5. Comes in line with like this SIBI here. That could be a nice draw, and we're just creating more resistance, more liquidity to the downside here. So that's actually perfect. But I gotta look at a yes though. Let's look at a yes. So this low here, yeah, we are not even close on the yes. So probably will actually take this inversion setup. Oh, I'll take it. I already took the high there. So let's say you enter, stop will already be at break even, but this will be a breaker setup. So I want to see us create this singular for leg gap here, this singular BISI, and I'll actually take this unicorn. If we do get a BISI here, so this will be our unicorn. Tap in it there. This would be our order block. Oh, that's not good. Alright, right there. That would be our entry. That would be our order block here. Yeah, right there. Great limit order. I'll risk 0.5% on this. It's actually a great setup. Let's see if I'm on the right account. I'm not. Oh wait, I am. Right. So let's wait on this. So we have a perch and revert right here. Where is it? Bar here. All right, let's get an order in. It is our unicorn. Stop is beneath the order block, and yeah, let's just wait. That's just it. And we'll hold until we tap into this SIBI. Let's wait. Looks really clean. Looks really clean. And we're of course patient. Still have singular for high gap, so that's good. Still waiting. Still waiting. Still have singular for high gap. Still waiting. Don't really have a long time to trade. Only will be trading AM session today. I'll be gone in like an hour, so if you don't get it set up, then it's fine. We'll just wait. Let's look at yes. Yes, looking good as well. But no SMT, we never took out these highs. On yes, we actually have perfectly equal highs. That's just beautiful. On yes, we have perfectly equal highs. Pretty low volume actually. Looks like we're getting that retracement. And we're anticipating the Judas swing right now. So it's 9:41. Most of the time you wait like 15 minutes after market opens until like 45. About to get tapped in. But yeah, we're really anticipating the Judas swing right now. Risk is 0.5%. That's like my max risk on like a funded account. So let's see. If we create a SIBI here and then inverse the SIBI, then I'll add to that. So let's mark out that SIBI. If we will have that there. Now with displacement to your downside. Stop is pretty safe. Only have a 1 minute order block here. Alright, so we totally filled up that gap. So order block is here. What do we tap? That's just random. Must be random. Must be random. If we close above this bearish candle here, then that will be the change in the state of delivery, and then I'll move my stop to this wick slow here. Because I still want to give this unicorn some room. So if we close above here, this would be our change in the state of delivery. So I actually need to mark this like this. Oops. Alright, beautiful. Risk goes here. And that's just it. Now we wait. Or should remove this here. Boom. So stop is beneath the unicorn. Or under, yeah, beneath the unicorn. So we could still tap into this unicorn again, but I don't want to see this get filled entirely. We could, because there's also a rejection block here, so we have another bigger imbalance here, so we could fill that more, fill this gap more. So let's see what we do. But this would be our changes in safe delivery, so it's pretty safe trade, I would say. So I actually want to see a pretty big pump to the upside after this candle closes. There's that unicorn tap back into. Let's remove this order block. So you can see this unicorn. So it's from here to here. Right there, from my entry to there. We tap into that unicorn again. And let's see what we do here. Alright, let's see. If we create like another PD array, like a singular busy on here, or like just a busy really, nothing else, then I'll add to that. But that, like, if we, this is just like a made up rule right now, but if you get like a busy inside of here and we can tap it into it again, I'll add there if it's beneath the -1 standard deviation. Alright, just like what I wanted to see. Alright, I don't want to see us, I want to see us expand really. Because if we fill up this entire gap, then I'll actually expect like a accumulation. Let's see what we do. So I want to see us go to the upside really. Or it would just look as accumulation. So we did fill up this entire gap, so it's not really what I wanted to see, but we'll see what happens. Oh. Wait, what? Oh yeah, no. Wait, what was my risk? It was like, yeah, right, 5,000, yeah. Alright, beautiful. Let's see it now. It's taking way too long. We're bullish right now because we got that strange in the state of delivery. That really confirms it. So if we, like, when our stop is hit, then I won't enter again. I'll just take the loss, and that will be my trading day, because I have to go and like 20 minutes. Gotta get it ready as well. Yeah. Just what I said is if we fill this gap, then I'm expecting accumulation. Look what we do. Let's see what we do. Looks like there will be an SMT because ES and Q were here right now, and then ES is actually pretty close near this low here, as you can see. So this low at opening, that's ES probably wants to sweep this. Yeah, there. And let's see what we do. So ES just swept that. So I want to see displacement like right now. If you place your stop at a reduction block constant encroachment, then you will be gone as well. Biggest rejection block was actually only 1 minute. This isn't one. Oh wait, only 1 minute isn't one either. It's actually not a rejection block. This isn't either. This isn't either. Alright, doesn't even fit the rules here. This all isn't a rejection block. If you follow my rules, like. But yeah, you could see it. It is like this. So maybe that's why it will fill. But we'll see. Alright, let's see. Alright, we're gone here. Alright, just like that. Alright. Crazy. Alright, next candle that's gonna expand. I wanna see it go up. Just go up. Create a Fourier gap there, not even fill up the Fourier gap, and just go here. Nice, it's looking good. Just like that, expand even more. More. And just like that. Alright, I'll add here. Stop's gonna be beneath here, beneath this low. You're like minus or like stop is 0.25% now. But I don't really want to see us go even back here to this gap. Don't really actually expect us to come back to this gap. So if we will, then I would add elf contracts more. But I don't really see us come back to here really. What's the stop here? Right here, and I want to risk 0.25%, so it would be 4 more contracts. Let's see if we fill up this gap here or tap into it barely. Let's see. Maybe we can get an institutional order flow entry drill here. Institutional order flow entry drill here. Here, and in this busy. Let's just remove it. Yeah, alright. Alright, we didn't get filled there. Alright. But that's fine, I guess. Don't know what happened there, but alright. We'll see if we can get another tap into that. Nope. Alright, that's fine. Like, ES and NQ are so not going in tandem right now. ES is actually bearish right now. It's so weird. Really don't want to see us return to this, actually. Alright, actually create a singular busy here. A busy there, or Sibi there, we have a Sibi there. We have a Sibi here. Yeah, this would be our singular Sibi. So it would just be focused on the standard deviation here. So it could be like somewhere there. We didn't tap the singular for Ray Gap yet, so we're good. We did already tap into this singular busy, busy SIBI on ES. But we didn't sweep those. We didn't sweep those equal highs, perfectly equal highs on ES. So these highs, we didn't sweep those yet. So. Alright, let's see. So what we're risking here is this is like the easy target. This low of this SIBI, that's like the easy target. So where we're really getting our target off is only the standard deviation, -1 standard deviation. Almost getting perfectly in line with that as well. So -1 standard deviation comes in line with its high, and you could look at this like a market maker buy model. So our smart money reversal here on like really small time frame, this is like a really big wick, but like on the second chart time frame, then this would be our original consolidation. First reaccumulation, second reaccumulation, even third reaccumulation, smart money reversal, come above there, low risk buy here. First reaccumulation again, or like the I don't even know. Forgot. Low risk buy here. Second stage of distribution, third stage, but we're creating like a market maker sell model for later now again. So this could be our original consolidation or reaccumulation, the second reaccumulation, and then smart money reversal from here, and then go even lower. So we'll see. I'll go at 10:05, then I'll go. Because I gotta get to the train. And my stop is staying below here. And I'll keep the contracts on. Let's see where we have an order block. So it's 3 minute. Here. This will actually be our 3 minute order block. So this it is. This is actually our order block. I don't even want to see us come back there. So my stop could already be here. And here. So that's where I wanna. That's where I'll place my stop. This is the order block. Busy here. Institutional order flow entry drill here. We could get like another tap into that. That would be our turtle soup, and then I'm still expecting this higher. So we'll see what happens. 2 more minutes, and then I'll go. And I'll just put a alert on here. TP hits. Stopped out here. Alright, good. Alright. So we got tapped into there again, into this busy. So we'll see what happens. 1 more minute. Let's see if he gets stopped out, or I don't even know. Let's see. Let's get this order block in here. Yeah. Alright. Probably a really nice inversion for a gap entry here. Breaker also. -2, -2.5 standard deviation, comes a bit higher. Let's look at constant encroachment here. We don't tap it there. Let's look here. -2, -2.5 standard deviation almost comes in line with like this constant encroachment of this CPI imbalance. We'll see what we do. We're anticipating this low, high, lower, low, higher, high. That's what we're anticipating. This will be a inversion. Let's see. Look where we react. Like, I don't know my order blocks. That's just crazy. That's so crazy. All right. There. All right. Let's see. How much are we risking? 0.39%. If we inverse this, then I'll add like 2 contracts more. Oh, it's already 5. I'll wait until 6. 10 seconds. I want to enter into here, but this is like what I'm seeing. Alright, I'll go. Alright, so see you guys. I don't even know, but yeah, bye. Alright, ew. Alright, so I had this marked out here. So that's actually good. We created more liquidity here, or did we? We actually already swept that at or on ES. Let's actually see. Yeah, this low we already swept that. Alright, so trade of this morning actually was a loss. Why was it a loss? How? It was a loss, but actually I'm actually really glad that it was a loss. So let's break it down, the trade. So we had this standard deviation, and our drawn liquidity was this basically this buy side right here. This was my drawn liquidity, and then also my drawn liquidity was the constant encroachment and the -2, -2.5 standard deviation. So what we had was we entered off of this unicorn, 1 minute unicorn, stop was beneath here. First target was this -1 standard deviation, or this high, and then second target was this here, so it would have been a 1/6 risk to reward. I trailed my stop to this low because this was a direction block, so I trailed it to here. Got a displacement to the upside here. Right here, got displacement to the upside. Again, created another BISI. So then I trailed my stop up even more because I was looking at an order block. And my rules are yet the one with the biggest volume, right? So this was a order block, yes, here. But what candle has the biggest volume? What candle is the biggest here? Well, let's look at the volume. 8.5k, look here. 8.5k, 8.7k, and 9.9k. But this one has the biggest range. So this to this low, that's like the whole candle. That's like the biggest candle with the biggest range and the biggest volume, right? So this would have been my order block. And where would my stop be? My stop would have been trailed to again this low, or it should have stayed at this low, because this is the rejection block, but it's also the order block. I thought that was just this candle because I didn't look at it that well. I had it like this, but you gotta zoom in, look at what color candle this is. This is a white color candle, so it's a bearish candle, so it's a bullish order block. So look, all right. So I trailed my stop at the rejection block first. So that is this here. So here was my stop on this line here. And where I trailed it to was here, because I thought this was the candle, this was the order block. But it actually was this order block. So where was my stop? Well, my entry was here. It was there, yeah. Here was my trailed stop already. This was my original stop. Here was my trailed stop. And where did I trail it to again? Where was it? All right, here. Let's remove this order block because you can see it. So this is where my stop should have been. And where was my stop? Right here. So I got stopped out with prices here, or this low is, or no, let's just look here. Price is 7632.5, and I got stopped out with 1, 2, 3, 4, 5, 6 ticks. So it's not even a point, so it's half a point. So I got stopped out with half a point, and then market just ran. So I actually got turtle souped here. So yeah, got all the displacement after that, and that would have been a really nice risk to reward. It would have been a 1 to 6, or yeah, 1 to 6 original stop. So my trail stop was already here, so it would have been a 1 to 9 actually. Because I also had partials, more partials. So it actually was a 1 to 6. It would have been a 1 to 6. I got stopped out with half a point, and market just ran straight to my TP. So I had a alert set, and I set it on alert on stopped out here, and then TP1 hit here, or TP hit here. So I got the notification, stopped out. All right. So I was thinking, all right, so it's fine. I was checking later, and I saw that market just ran without me. But I first got the notification, which said I got stopped out, and then like a few minutes later, I was thinking, yeah, okay. And then a few minutes later, I got the message that my TP was hit. Like, I don't even know, like 3 minutes, or I don't even know what it was. A couple minutes, and yeah. So I wanted to check immediately, and I saw that I got stopped out with half a point that we now counted. So yeah, so what I learned, again, look at the candles better. That's just it. So stop us on this candle, because I thought this was the order block, but this is the actual order block, has the highest volume, is the biggest candle. This is where my stop should have been. Would have been really close to my stop loss, but still, mark just ran completely to my TP. So I'm gonna write that in my notes. Gonna put this trade on what is the app even called? A Notion. And yeah, I'm gonna learn from this. So this is really good actually, and it's better that I get it here, that I make this mistake here on this actual demo account instead of just my my Top Step or Apex account. So yeah, yeah, that's basically it. So that's why I learned. Didn't take any other trades. Probably won't take any other trade, because we already took sell side here on ES. We're we're really bearish actually on NQ and ES. So I still actually want to see a run down here, but I don't really think that we're gonna get it today. If you look at this entire leg, because this isn't a swing high, I want to see like a swing high. Yes, this is a swing high, but I want to see like the entire range. Then if we look from this entire range, then still this is the singular gap. So this is where we're reaching for now. And what I'm thinking is still we want to go for sell side, but we will run out of time. And what is the most important rule? That is we leave liquidity for time. And even though there's liquidity here, time doesn't align, so it isn't a right trade. So I'll just wait until tomorrow. If we take it out in London, then that's totally fine. I'll just look for another setup tomorrow, or not even tomorrow. Tomorrow's Wednesday. We have no news Wednesday, so I'll wait on Thursday. So no trade tomorrow. No other trade today. Just took a loss. 0-1 today. So completely fine. Just really happy that I actually got stopped out and I can learn from this. So yeah, really, I don't know how to say it. Like, it's like a sign or something. It's like it's really cool. But I really like it that I got this that I got stopped out here. But I'll learn from this, and yeah, see you on Thursday probably. Bye.